Hello. Well, it's no secret that the UK consumer's been under a lot of pressure over the last year. Last year, consumer spending grew at the slowest rate in 5 years. The culprit, of course, has been a combination of higher inflation and flatlining earnings growth. Higher inflation driven by commodity prices, a big fall in sterling, and earnings disappointingly sluggish despite the fact that the unemployment rate is at a 44-year low. We think this combination of earnings weakness and high inflation is starting to turn. If we look at the labour market, we are starting to see signs of wage pressures. One of the big stories in the jobs market in the last 10 years is that people have been staying put in their existing jobs, just what you'd expect in an environment of uncertainty. So the rate of movement of people from one job to another has slowed dramatically. In the fourth quarter of last year, it rose to its highest level in 10 years. And interestingly, the people who are changing jobs are getting quite sizable pay increases, on average 6%. So this tends to be a leading indicator of wider pay growth. So we think this tight labour market and of course the effect of Brexit on immigration, which is to squeeze labour supply, is likely to generate some upward pressure on wages in 2018. And at the same time, I think the worst of the inflation is behind us. Over the last year, the pound has actually risen on a trade-weighted basis by about 6%. That should help keep down import prices. And actually commodity prices are no longer rising at the sort of rates that we were seeing 2-3 years ago. So I think the story is that we're going to see rather less pressure on consumer spending power in 2018, but we don't think that'll translate into any sort of a big bounce in consumer spending. And the reason is there are a whole series of other factors which are looking rather less encouraging. Banks are tightening up on credit lending, interest rates are rising, levels of consumer savings are low, which means there's less scope to dip into savings to spend more. And the big boost to consumer spending in recent years that's come from the compensation payments for the mis-selling of payment protection insurance, they are petering out. So we're thinking, we think we're looking at fairly lackluster growth in consumer spending over the next couple of years. Now the consumer is 2/3 of the UK economy, so what it does mean is that I think the UK economy is going to be much more dependent on manufacturing output, on investment and exports for driving growth, both in 2018 and 2019.